All right, guys. Very spontaneous breakdown. So if there's noise in the background, I'll do my best to edit the audio so that you guys are going to be able to actually hear what's going on. So I will start off just with a blank chart. This is the one. I'll start off with just a blank chart. We're gonna move drawings in when they're there. So you're a CAD, right? First thing I noticed, right? Let me zoom out a little bit. It's been coming down for quite some time, and EURCAD had an obvious bearish price action because the Canadian dollar came out with some positive employment news, right? So that being said, price came up right here in this area, and you have to be able to analyze left to right, right? And also you have to be able to analyze once the left side's done, you have to be able to analyze current price, right? So whenever you're in doubt, look left. Is there any more liquidity that needs to be taken in reference to your dealing range and things like that? So you can see right here, they came down, they had a market structure shift here in this area. They started chasing buy side continuously, creating swing highs and swing lows. And then eventually they started to go down. And you can see that relative to the last major structure break, which is right here, right? You can see right here, this was a swing low and a swing high. And then price came down. And then you had displacement higher and then displacement lower on this swing low. So relative to the last structure break right here, you can see that they had an obvious market structure shift. And the market structure shift is a structure break. It's just another different word for it. It's like the I guess you can say SMC. I hate that word so much. The SMC term for it, but that's a market structure shift right there. And that was the latest one, right? So zooming out, now you can see where has this respected, right? In reference to that, there is a order block right here that really had been respected pretty nicely, actually. So we can draw that in. It's kind of like a chain. You're like drawing a chain of things. You know what I mean? Where's the last liquidity take? Wherever the last liquidity take happened will show you exactly what the next thing is going to happen. So that was obviously respected, and they obviously chased buy side right here on the 1H, all the way up to, I would say, let me see, make sure, all the way up to here. But I'm gonna count all of the buy side within this, and I'll change the template in just a moment here. 1H buy side liquidity, right? So you know that every time you have a market structure shift, displacement as well. So you have the swing high was taken here, and then the swing low was taken here as displacement. Price came down, right? Chasing a bunch of sell side. The next thing that they have to do is chase a bunch of buy side, right? Also, what I tell you about major swing highs and swing lows, right? This swing low is taken, so the next thing that they have to be able to take is some form of a major swing high, right? Major swing lows and major swing highs are where buy and sell side are placed in position. So we got 1H sell side liquidity. Where is it at? Here it is. So you have 1H sell side liquidity right here. So relative to the last, let me get something real quick here. This is gonna be better. Relative to the last actual sell side take, which was in that area. One moment. Hold on. Give me one moment. I got to reply to a text message. So relative to this last swing low being taken, that's sell side liquidity as you see. Price is going to have to take out some swing high. So if you look over here, you had a bunch of major swing highs being taken up here. So you can think of this as like how do you say, like a fishbowl. It's the best way to describe it to people for like a visual, because visuals are very important. Pull this down a lot actually. Visuals are very important for people to be able to get things. And anything, right? Anything that is a lower high, right? Relative to the last market structure shift, relative to the last sell side liquidity take, if you're looking to go short, you're going to know that you're going to be chasing longs, right? So you can think of this as like a big fishbowl right here, a big U, if you will. You have the high right here, and then it created a U right here. Anything within the bull is going to be taken as buy side up to the point of origin where it was respected, which would be this candle. So they took buy side, right? They came all the way up, kept chasing buy side, kept chasing buy side, kept taking buy side until they respected this order block pretty perfectly, right? Zooming in, now you have context for the short, more context for the short. You've recently taken sell side. Now you know they have to take buy side, so you wait for the setup. The setup comes up to premium territory relative to the last market structure shift. And if you draw your premium discount, you can see that you have optimal trade entry confluence, 79% level, right? On the 1H in line with that order block. So there's more context and confluence right there. So now, right, what you would be looking for on, like, let's just say the 1H would be after the mitigation of the order block, you would be waiting for a market structure shift again on the 1H. If you have this confirmation already, you don't have to wait for this, but if you have this confirmation already, then you know that's us. Then you know that after they had a market structure shift, that shows and that tells you that there's going to be a new dealing range, essentially from the high to the low, right? Wherever it ended up stopping at, you know that the next thing that they're going to have to do, since they took out this swing low right here, right? Because I remember I told you buy and sell side is on swing highs and swing lows, right? Since they took out that swing low right there, the next thing that they're going to have to do, and after they take out the swing low, there's always one more, because we have to remember liquidity needs to be created and then taken. So oftentimes the reason why people get stopped out is because they don't wait for the liquidity to be created and then taken, right? So you can see that the market structure shift happened right here. It wicked down and traded below that swing low right here. And after that, it came up, created a high, right? And what did I just tell you about the rule? You have anything within a fishbowl. And since this is your new dealing range, that means this is your new fishbowl right here. It's the best way to explain it, right? After that, what do you have? You have them coming for the next thing that would be probable, which would be a 1H buy side liquidity on a swing high. When did that happen? 1H buy side liquidity, and that's the next available swing high. So you know for a fact at this point, with the rules given, that this swing high is going to need to be taken before the move. What's above the swing high? An order block that was left. And why is this order block significant or important? The reason why the order block is significant or important is because this is the order block that was left before on the push down that took the sell side. Any order block that pushes down and takes liquidity or has a market structure shift is a very high probability point of interest, POI. Real order blocks take liquidity. That's the rule. Everything else is fake. So you have another order block right here, right? That's a very high probable order block. Let me zoom in to make sure I did this correctly. It can go just a little centimeter down, and you can see right here where it rejected. Very small rejection, but if you would have done an aggressive entry right here, it would have been a sniper. So at that point, you have your rules, right? You're just fine-tuning it in, right? Basically, your job is to make sure that this current area is not going to have to continue to chase buy side, because this could be a swing high that could take. The only reason why this is not a swing high is because it took buy side and sell side. You have displacement higher and displacement lower right here, actually. 1H buy side right here. 1H buy side right here. So swing high, swing low, displacement higher, traded above it, displacement lower, market structure shift. So you can just add those confirmations as well right here. And I encourage you to actually, use this thing to, and then use this thing to be able to type notes about your trades, right? So you have Asian session highs, right? So this is Asian session low. This is the 50% of the Asian session, and this is the Asian session high. What happened? Asian session highs were taken. So I should put this over here. Asian session highs were taken. Confirmation. You had a market structure shift. Confirmation. Check. Right? How many confirmations do you have? You had a swing high taken for buy side. Check. That's 3 confirmations and confluences. How many more can you add here? You had a new dealing range. You can add your Fibonacci if you want to. You had 62 to 79% optimal trade entry in line with the order block and above the liquidity. confirmation. I don't like to keep that there most times. And then on at that point, and then you have also New York kill zone established right here. Also you had London liquidity taken, right? London liquidity will always be taken every morning between 8 and 10. Eastern Standard Time specifically. So if you are on a different time zone, you will need to go here and go to UTC4 New York, which is the Eastern time. This is all happening on Eastern time. So that kind of lines up with time and price, right? We got London liquidity. And you can make that a little bit more visible. I actually think I will too myself. That's the wrong color. So yeah, London liquidity taken right here, and London happens between 1 and 4 to 5 a.m. I would say 4 a.m. And then there's a small gap in between New York starting. Do not trade that gap. That's where manipulation happens, as you can see. In between London and New York, you have manipulation happening here to take the London liquidity. So that's, don't trade in between that gap. And then eventually at 7 o'clock in the morning Eastern time, as you can see in the bottom right here, New York kill zone starts, goes until 10. Right around 10 a.m., the setup is ready. And you can see that it took London liquidity. They took Asian session highs. They took buy-side liquidity here. You have a market structure shift here. You have an order block right here in chain, right, with another order block right here relative to the last market structure shift. But you didn't even have to. You didn't even have to. You didn't even have to draw that in if you didn't want to. If you didn't want to draw this in, you could have solely went off of the buy-side liquidity being taken, some type of swing high, and the kill zone and things like that. I would recommend, until you get more kind of seasoned in liquidity, to be able to kind of chain it up, right? It'll always be relative to the last market structure shift. You can see right here, price was clearly bullish, and then you had sell side liquidity take. That's technically a market structure shift too. That's showing you we were chasing buy side, but now we're chasing sell side, right? So now, right, relative to that, right, this market structure shift right here, the sell side liquidity take, this is your new dealing range. This came up and it filled an imbalance actually. Respected it, dropped down, right? This was obviously chasing buy side right here. Market structure shift again. So this is your new dealing range right here. Price came up, respected that order block, which is right here. Came down, did another market structure shift right here, as well as a displacement higher on this wick right here, and displacement lower on this swing low right here. And then came back up and created a lower high, which is going to be the buy side to be taken. Price had a break of structure right here again, right? Taking this swing low, but you could draw that in as well if you wanted to, and you should. 1H sell side liquidity. So you can draw that in if you want to, and then buy side happens, boom, comes up, and you expect it to take this high, right? If you know anything about my education, you know that the order blocks above and below liquidity are going to be the valid ones, and also they have to qualify as in like the order block pushed down and took some liquidity, like the market structure shift right here. So you expect that to be taken into the order block. You wait for the initial reaction. At that point, you can drop down to the 15-minute and start to look for confirmations. What's happened, right? This is the same thing as transposed, right? At that point. And then you go to the actual trade and you can look and like, you know, I might be wrong on the trade, you know what I mean? Like that's normal. But so far, I saw this happen after the 1H after the 1H mitigation. I dropped down to the 15-minute, and this is displacement higher. This is displacement lower right here on the swing high and this swing low on the 15-minute. There's a confirmation, also a market structure shift. So I set a limit order. Price came up, topped the limit order. It reached the 50%, and then now we are retesting entry. So with that being said, this is for 6.62%, and I'm targeting the major swing low right here, 15-minute sell side liquidity for 6.62%. So with that being said, I do expect price to continue to the downside from here. Pretty easy. Basically, you're taking your higher time frame confirmations, and when in this case it was the 1H, and then you are going down to the 15-minute and essentially looking for those same ones in order to set a limit order and get in, and that's it. That's essentially all. And then you know, obviously you had New York kill zone finishing, yeah, Asian highs taken, and everything else. So At that point, you could just pair liquidity, and these are the 1H order blocks and how they reflect. Now, personally, I only drew in this one order block because I already knew that this was, with the 1H market structure shift, that this was my new dealing range, and that price would not exceed the strong high after the displacement. So I wasn't really worried about anything left. But if you need for more clarity to do two zones and find out where the initial reaction that led to the market structure shift was respecting, then you can also draw that in. My bad, I need to be on the 1H. Then you can also draw that in order to have a little bit more confirmation in the trade. So with that being said, I do expect, once again, price to continue down. This is going to be not like a weekend hold or anything like that. It's just going to be like maybe 2 or 3 hour hold, I would assume. Price is going to continue down. And since this is a EURCAD, CAD in the Asian session pair, it may have some heavy movement in the Asian session, but I don't anticipate holding this more than like 2 to 3 hours, maybe 4 hours at best. I would like to reach target, but here's, when price comes out and takes that out, swing low, I can expect some type of liquidity to be generated in terms of a lower high. And then price is going to take that out into some type of footprint and then have a continuation. And the next level of sell side that they could possibly take would be this swing low. So after that, I would expect a very aggressive push down to my TP. And that's your CAD breakdown for that. So essentially what I did was I took the 1H confirmations, dropped down to the 15-minute, and then I looked for signs that this was going down from there. With that being said, and then I also have prime market terminal as well. For confirmations, the majority of retailers are selling, or my bad, they are buying this pair. My bad, selling this pair. Can't talk today. Haven't had coffee. They are buying this pair, and fundamentals point short. So this is a very high probability trade. With that being said, I'm going to see you guys later. And this was a limit order after the market structure shift right here. Confirmation. This is technically a nice swing low right here. This is a swing high. This is a strong high, actually. And these are the confirmations I had. Asian session highs taking bearish fractal. I'll teach about that soon. 79% optimal trade entry. As you can see right here, I drew my Fibonacci from wick to wick, from high to low, where the market structure shift happened. Not now in this candle, but like right here on this low. And you can see the result of that. So price came up, and I was respecting this order block right here to push down in order to take this sell side and all of the sell side below down to my target. And that's it. That's, the confirmations, some of the confirmations that I look for, and that's Euro Canadian dollar breakdown. I will see you guys later.